Hey, good morning everybody, this is Henry. It's 8:22 a.m. the 29th of July 2009. In about 8 minutes we're gonna get the US durable goods. The number is expected to be at 0.1%, and the previous number was at 1.1%. What we're looking at is at least a 1.8% of deviation. It is a huge deviation in order to see this news move the market. So in the case that we get a 1.9 to 2% of release, it should be pretty good for the US dollar, and we will be looking at the USD JPY pair for a long trade. Now if the number is worse by at least 1.8%, that's giving us a negative 1.7 of a release number, then we'll be looking to sell the USD JPY pair. So the news will come out in 7 minutes. Right now, if we look at the dollar yen pair, dollar yen has traded all the way to the 94 figure, and since it has strengthened to the 94 figure, it has retraced back up to the 95 figure. So it's been trading in a 100 pips range. Now it's sitting at 94.84. And if we look at the euro dollar has been losing strength. So basically what we're seeing overnight with the Asian and the London session is that the US dollar has been strengthening, and rightfully so, because the home data has been pretty positive lately. We have the existing home data a little bit better than expected, but the new home data came out much better than expected. Even though it didn't hit a trigger for trade, but it was 32,000 more homes being sold than expectation. So with these two numbers in mind, which has a very high correlation to the durable goods mainly, we're talking about goods that has 3 years of life or longer. So they're talking about appliances such as refrigerators and dishwashers and stuff like that, and which is associated with home sales. So we could be looking at a much better than expected durable good with this month's release, and we could be looking at some market reaction right now of pricing in that release. So what we'll do is we'll look at this number in real time with the release, and then we'll see if we can get into a trade. And the deviation that we're looking for is minimum of 1.8%. It's kind of high, but that is the safe trigger for this release. Okay, so be back in about 5 minutes to look at this trade together.
Text from Fed steadily speaking of the economy at the bottom of the hour.
Yeah, it's going to be less than a minute now, as you heard from Trader News.
Durable goods order should be on just a few seconds. Minus 2.5% worse than minus 0.6% expected. X transport of plus 1.1% higher than 0.0% expected. Prior durables revised lower to 1.3% from 1.8% prior. X transport revised 0.3 lower to 0.8%. Fed's definitely saying the contraction
Okay, it is much worse than expected.
Are aimed at lowering mortgage and other rates, saying he's concerned over the Fed exit, very premature. Again, saying concern over the Fed exit is very premature. So Conoco reporting 87 cents a share, 2 cents better than expected. Revenues light at 35.4 billion versus 39 estimate. Charlie Oscar Papa. Dudley goes on to say the Fed can keep inflation in check and takes inflation concerns very seriously, noting the Fed's interest margin is likely to turn negative.
Okay, the number came out much worse than expected. We're seeing some immediate market reaction. Not much reaction in the area of the euro dollar and the pound dollar. Dollar yen has dropped about 10 to 13 pips, and since then we've seen some retracement back to the 94.85 area. Not much of market reaction, to be honest with you. The number, once again, is something that I haven't been really looking at. If you would read a few of my previous emails, you know that I've been skipping this news for a few times. just precisely because sometimes even if you get the number, you don't see much of a reaction with it. Number is bad. Number is negative 2.5% versus a negative 0.6%. However, the durable X transportation was actually better. You have a 1.1% versus a 0.0%. So we have a strong conflict. Prior was revised from 1.8 to 1.3, so it was revised down. And the prior X transportation was also revised down from 1.1 to 0.8. So clearly the X transportation is 1.1 versus the 0.1 number that we were expecting, and the headline is negative 2.5 versus a 0.6. So clearly we do have a strong conflict in the number, and that's one of the things that we have as we wait for the market to retrace. We have the luxury of waiting and gauging the market reaction first and verifying the numbers later. So with this conflict, is really market doesn't know what to do. That's why we only saw about 10 to 12 pips of movement on the dollar yen. And if you look at any major currencies pairs right now, you're seeing that whatever movement that took place basically retraced back to the pre-release level. So this is definitely a no trade based on this number.